Good morning. Thank you for joining us today. My name is Jonathan Dickson, Vice President of OTC Markets Group in London. Today we're joined by Guimard, who is the founder and CEO of FINEO Investor Relations Advisors. We're just going to give it one more quick minute just to see, as we have got participants joining now, and we'll just give it 30 seconds actually, and then we'll crack on. So, morning. As I mentioned, my name is Jonathan Dickson, Vice President of International Corporate Services, OTC Markets Group. Today, we're joined by Guimard, founder and CEO of FINEO Investor Relations Advisors. Thank you for joining us. Anne, would you mind, please, just giving us an overview of yourself and FINEO Investor Relations Advisors?
Thank you, Jonathan. Good morning, everyone. Good afternoon or good evening for those of you joining us from another region. I think there's someone from Australia joining us today. I am the founder and CEO of FINEO Investor Relations Advisors. It is indeed a firm that I established about 25 years ago, actually, mind you, to help companies, boards, leadership teams, mostly public companies or IPO candidates to articulate shareholder value. My background is in finance. I have been a sell-side analyst, an investment banker, and a financial controller at various multinationals in Europe. But quite importantly, I have run two of Europe's largest IR departments, post-privatizations in France. And one of the key features of those two companies, Alcatel and Saint-Gobain, namely, was that they were multi-listed, Alcatel in 12 markets and Saint-Gobain in 10 different markets, which gives me a rather unique edge or understanding of what it means to be cross-traded or double-listed or dual or multi-listed in various markets. But again, thank you for having me today.
No worries, and thank you very much for joining us today, Anne. Obviously, this is a UK and European-centric webinar. Regarding questions, this isn't going to be the traditional format of rattling through a slide presentation. So please, as we go forwards, put your questions into the box and we will look to answer them as we go through. And there will be the opportunity at the end to answer any other questions and anything else after. If we don't have time, we're happy to help. So there are people involved in this webinar who are not familiar with OTC Markets Group and what we do. So I'm just going to give you a very quick overview of that. So OTC Markets Group is the third stock market in the United States in the same way that NASDAQ and New York Stock Exchange are. We are actually the largest stock market in the US for international public companies which have their primary listing outside of the US. And the reason being is if you have your primary listing outside of the US, you have an SEC exemption which you are afforded, which gives you the ability to rely on your home market disclosure in order to have a US dollar quote in US market hours for US investors, without the requirements or duplicative reporting of SEC registration, Sarbanes-Oxley, or US GAAP. In addition, we are the market for all level 1 ADRs and the ordinary share, known as the F share, the foreign ordinary, of which the majority of that volume will print in that home market, that US dollar volume coming back. So I'll leave it there. Again, questions to come through. I think we'll leave the slides alone today, so we'll spare you of that. But I will go straight into a question for Anne, if I may.
Please, go ahead.
Over the last 25 years, yourself and your company, FINEO, has helped over 1,500 companies in 70 countries with their investor relations approach and strategic advice. Albeit every company presents a unique opportunity and challenge, what would you say the non-negotiables are, if you like, of your investor relations strategy?
Well, at FINEO, we do investor relations advisory services, but also we're actually the only IR firm in the world to provide investor relations training and coaching. And as you were kind to recall the audience, I have personally trained or advised quite a number of companies across the world, regardless of their market caps or the industry they operate. So with this in mind, I'd say from my perspective, there are three absolute non-negotiables, to use this wonderful expression. One is, first and foremost, having the right mindset, and having the right mindset at the highest level of the companies, the CEO, the chairman, the board, the CFO, not just, putting out good numbers. What do I mean by having the right mindset? Having the right mindset when it comes to cross trading, when it comes to listing, to dual listing, is the fact that the share price is only the tip of the iceberg. Having the right mindset means that IR is not a necessary evil. You have to comply with rules. You have to disclose things that you may not want to disclose, through the good, the bad, and the ugly. Having the right mindset is understanding what transparency means. Having the right mindset means being willing and able to go beyond transparency requirements, because actually being more transparent than is really legally required, whatever the jurisdiction, makes you stronger. Having the right mindset is also understanding that there are more than 50,000 listed companies in the world, a good 12,000, I think, on OTC markets, meaning you are competing against at least 49,999 other companies, meaning it's marketing. So having the right mindset is putting the right organization in place. And for me, that is the second non-negotiable. What I mean by organization is having a robust, reliable reporting system, financial reporting, ESG reporting, and operational reporting. And what I mean by robust and reliable, it is a system that allows you to not just provide the year-on-year performance evaluate or change, but it's also what I call a multidimensional approach to reporting. What does the sequential analysis tell about your story? How does your performance stack against your guidance? How does it compare to your historical track record? That's the second non-negotiable, and I'm happy to answer any questions you have on the first two, but on the third one as well, which is putting investor relations at the right place within the corporate ecosystem. Investor relations is a strategic function. 75% of the listed companies in the world have an IR department that reports to the CFO. That's the main structure. But it also means, from my perspective, having a de-siloed understanding and way of working with IR, meaning IR needs to have access to the board, the CEO, and not just a reporting line or a dotted line or direct reported line. It also means working hand in hand and not against each other, as is often the case with corporate communications, with legal departments, corporate counsel, and HR. So those are the three non-negotiables from my perspective and based on my experience. And I can assure you that when the right mindset is in place, regardless of the performance, you differentiate yourselves from your competitors.
No, thanks, Helen. I think you make a good point there, because we talk about the tens of thousands of listed companies globally around the world. And just going to my next question, with global capital markets becoming more connected and cross-border transactions becoming ever more frequent, what do you think the future holds for IROs in the international arena, or generally their strategy in the international arena?
I'd say, first and foremost, investor relations is here to stay. I just came back from the National Investor Relations Institute annual conference, which is the largest gathering of investor relations professionals in the world. And two topics dominated the discussions, and they probably won't be much of a surprise to any of our participants today. One is ChatGPT and everything that relates to artificial intelligence, and the other one is ESG. Where does ESG sit or should sit in an organization? Should it be under IR or a separate entity? Should it report to corporate communications, or the question remains open. One of the big differences of perceptions of where ESG should be sitting in the organization of a listed company is the jurisdiction, your home market. In other words, in Europe, we tend to have a very long history already of regulatory requirements when it comes to ESG disclosure, and particularly the E. The G, the governance aspect, has been in place across the world for quite a few decades already. So that's an open question. The other key topic is artificial intelligence. And the consensus is, and I do share that because I use artificial intelligence in some of the work that we help our clients achieve. It's a productivity tool, mostly from an IR perspective. But it's also a way, a more sophisticated way, and there are some firms that are doing great things there to target the right investors. So those are, I'd say, the two technical, industry-driven type of challenges, but also opportunities that the future holds for investor relations professionals and listed companies alike. But I would like to add another perspective. Both NERI, the IRS, which is the UK Investor Relations Society, conduct every year surveys of the IR profession. And I just looked at, before, as I was preparing for today's webinars, I looked at the most recent statistics. And according to these reports, the average tenure of existing IROs in their jobs is about 5 years. Now, this is an average. So, of course, there are people who've been there more recently and others who have a more experience, but the average is 5 years. How many of those IROs have gone through recessions, have had to articulate a narrative, have had to adjust, update their equity story to reflect the impact of a changing world on their company's performance? And last but not least, and most unfortunately, how many of us in our respective jobs have had to deal with war or wars, plural, unfortunately? So I think all of this, from my perspective, because I'm quite passionate, as I'm sure you can tell, about investor relations, all of this is what the future of our profession is going to be made of. So a lot of challenges ahead, but as challenges abound, so are the opportunities for those who still do not have achieved that, to get your seat at the table.
Yeah, no, very good points. And I think it's a very complex arena, and it's great to have somebody with so much experience like yourself who's been around and understands it over the years. There are a few questions which have just come through. I'll take these first couple ones, Anne, because they are
please do.
OTC markets. The first one, in the UK, we have many events for high net worth to hear about small cap companies. Are there any events like this for OTC listed small caps? The answer is yes. The US is awash with conferences and the ability to tell the story. In the United States, companies which actually join OTC Markets Group, they have their primary listing outside of the US and cross-trade into the market, onto our market in the US. We actually run a lot of these opportunities ourselves. Again, we are a stock market. That is our primary function. However, we do have some small add-ons that will allow those companies to tell their stories. So the Virtual Investor Conference, we acquired this from PR Newswire a couple of years ago. We are actually running a biotech conference with UK issuers that have cross-traded tomorrow. And we will market that up to 90,000 US retail and institutional investors, as well as financial media. And you can present live from wherever you are in the world. So the UK companies tomorrow will likely present from the UK, and we will give the data for who watched that. So if it is a family office in Houston, we'll tell you who watched it and their time. You have a look at the OTC Markets website, you'll see videos with some of our clients like Heineken, Adidas, Roche. We push those out. There are separate to us, and for example, as part of the Premium Provider Directory, FINEO. Now, these are vetted organizations that we work with and that we promote because we know that it's to a high standard, that we often refer those companies which cross-trade to do that. So yes, and outside of that, hundreds of conferences and sector specific across the US. So I can answer that afterwards again in an email and run that through you, so I will do. The next question, in reference to the webinar's title, Leverage Your European Listing to Access US Investors, you're interested about knowing the practical steps of gaining access to US investors and the process of dual listing. So first things there, I will just mention the phrase dual listing, and Anne and I have joked about this over the years. If you're doing a dual listing, you're joining the New York Stock Exchange or NASDAQ. Technically, this is called a cross trade. In many ways, it's the same thing, but you're not registering with the SEC. You're not issuing more shares into the US. You're relying entirely on your home market disclosure. So if you are listed in Paris on Euronext, you're going to be leveraging your Euronext disclosure to get access to the US those US investors have a US dollar quote in US market hours. Now, the practical steps, it's actually very simple. And the reason being is you are leveraging your home market disclosure. Now, that's the key thing. Our compliance team in DC, we're looking at your home market disclosure. That's the most important part of the process. So the actual process is an application form, and it basically says who your directors, who your advisors, what does your share register look like, bit of background information. That's submitted to our compliance team in DC. At the same time, there is a requirement in order to join the market to have an approved letter from what we call an OTC sponsor, of which we have sponsors in the UK. We've got them in Paris, in Germany, throughout the Nordic regions, and they will act for you and say, yes, this company is in good compliance, in good standing, on a qualified foreign exchange. That letter comes through to us. And at that point, around 8 weeks later from the submission of that initial application, those companies can step up and have a US dollar quote, which is broadly taken by every bank and broker in the US that takes the NASDAQ and the New York Stock Exchange. I hope that answers those questions. Please keep them coming through. I'm going to go back to a question for Anne. And in your view, what are the benefits of a diversified shareholder base? In your opinion, how do US investors differ from the rest of the world? And what kind of investor relations strategy should European companies adopt or improve?
Thank you for this very interesting question, Jonathan. Allow me to combine my answers with an additional comment on your answers to the previous questions. While the main goal of an OTC cross-trading strategy is to attract US investors, and I'll come to the tactics or the strategy on how to achieve that, I would also highlight the fact that attracting US investors is not or should not be the only goal of a OTC cross-trading agreement or strategy, because there are many other benefits. Most of them are untapped. Typically, and I'll give you a real-life example. One of our clients was a French IT services companies and a small cap, market cap around 300 million euros, definitely too small for the usual suspects or the usual large US institutions investing in non-US equities. However, the CEO kept going to the US quarter after quarter, and we were tracking the evolution of their shareholder base, and we didn't see any movement or any increase or any uptick of US ownership. So one day I did ask the CEO, are you sure it's a good use of your time to keep going to the US while you have not tapped enough of tier 2, tier 3 European investors? And his answers was the following. He said, but I'm not necessarily looking for US investors. I just happen to have this business, which we intend to float in the US. It's a US acquisition that we made a few years ago. We intend to float this business in the US, and we want to be prepared. So I'm going to the US every quarter to get familiar with the type of questions, the type of modeling, the type of methodology that US investors apply to business like ours, so that by the time we are ready to float this business in the US, we'll have the robust investment case equity story to support this flotation. This is what they did, and they were quite successful in so doing. A couple of weeks ago, I published on the OTC Market blog, so I guess it still is available there, and it's on our website at FINEO.com as well, an article on the hidden benefits or how to maximize your ROI when it comes to your cross trading, and how it can actually benefit beyond the share price, beyond your US ownership of your shares, your domestic market, because for me those go hand in hand. So it's a global IR strategy, and what I would like to say is that beyond the normal or usual or classic investor targeting techniques for which you have a lot of vendors and techniques available, in addition to what OTC Markets offers. I'd say the one thing that every listed company cross-traded on OTC who's wondering, and I know we have some of those with us today, who's wondering how to leverage their OTC cross-trading, how to attract more US investors, I'd say very basically, it's make yourself visible. It is as simple as having a robust IR website. It's about looking at what your US peers, maybe some of them are just not peers from a market cap perspective or from an industry perspective, but they are competitors of you from a business perspective. How do they communicate? Do they, how different are your metrics, your KPIs, your key performance indicators from theirs? One of the easiest way, which I find the most effective, is have an earnings announcement that matches the way US companies announce or reports. Its form and content are always closely intertwined, and you should not consider that because you are translating your local earnings announcement in English, it's going to fly, and US investors will see it. No, it does take a little bit of work to make sure, but it does take research. I would say to a very large extent, investor relations is quite comparable to marketing. So you're looking for new customers. Do you know what your potential customers like or don't like as well? So it's sometimes I find it very easy to implement and more effective actually. It's to go back to the basics. Are you visible? Do you distribute globally and especially in the US your results announcements? How are they structured? Do they appeal in form and in content to US investors? And then, it's a marketing strategy combining, I'd say, marketing techniques with IR know-how.
Yeah, actually, that's a really good point you make there, Anne. And I'm just going to, I can relate this to one of the questions which has just come through, which is really timely, which is around the accessing of US investors in its rawest form. And the reality is that, yes, on our market, on OTCQX, which is our premium tier, you do have the likes of Sainsbury's, Adidas, Marks and Spencer's, EasyJet, Heineken, Roche, big global brands that absolutely want to access the US, that do not really want to register with the SEC, which is why they elect to trade on OTCQX. Having said that, the vast majority of companies which trade in our market across OTCQB are venture market, where there is anywhere up to 1,400 issuers, and OTCQX, which has 650. The majority of those companies are going to be less than 500 million market cap. And that is a reality. So that demonstrates greater challenges for those companies. A popular misconception is that US investors can just buy London, Paris, Frankfurt listed securities. It's just not the case. That US dollar quote is not there. If you have let's call it an AIM listed company in London, and you put that ticker into your Schwab, Fidelity, E-Trade app, or call that broker, it's unlikely they're going to be able to trade that into the home market. So that's our primary function, is effectively switching the lights on for trading. And that is a key part to the IR strategy, is actually being able to be bought or sold in its rawest form. I've just got another question just popped through just on the cost of dual listing, the cross trade onto the OTC market in the US. So we have two tiers, as I mentioned. We have the top tier OTCQX. The annual fee to trade an OTCQX is $25,000. The OTCQB, which is our venture market, is $15,000. Now, if we want to call it a listing, that's your listing fee, but it is a cross trade. There is a one-off application of $5,000, and there is again the one-off engagement with that sponsor, and that can vary in price depending on the relationship. But again, I'll be happy to share my opinion with that offline. So those are the costs with regards to joining the market. There is another part to this which is key, which is the blue sky compliance. Now, the US, God bless America, it's all state by state. It's not a federal rule. There is something called blue sky state compliance. And effectively what that is if you are not listed on the New York Stock Exchange, NASDAQ, or trade on OTCQX or QB, or made alternative arrangements, is against US state securities law, be recommended to be put in a private client portfolio or management or managed accounts, or have research distributed below institutional level in the US. Once you join OTCQX and QB, you get exemptions throughout the US on a state-by-state basis automatically, which means that if Raymond James in Dallas like that 200 million market cap Euronext listed issuer, they can go to all their managed money accounts and start to recommend that. Without that, they can't. So that's a really key part to this. Just going through the other questions, and I'm just going to go straight one you again, just one of our prepared ones. In your opinion, how do US investors differ from the rest of the world, and what kind of investor relations strategy should European companies adopt to improve?
All right. This relates to the comment that I made earlier. For instance, a key difference is the time horizon. US are said to be more short-term oriented. US investors are said to be more short-term oriented, and European investors, and those of you who will certainly have done both roadshows or have been doing roadshows in both regions, will have noticed the difference. However, those differences are blurring. Typically, a US earnings announcement will have, I'd say, almost will have the numbers and the basic narrative, but US companies will put a lot of effort in the prepared remarks, so the script, in other words, of their earnings call. However, allow me to come back to the issue of costs. I think this is part of what I call having the right mindset. Doing cross-trading in the US or in any other jurisdiction, but cross-trading or dual listing, cross-trading in our case is an investment. If you start thinking by or considering that it is a cost, you're bound to fail. If you consider that it is an investment, so you have, as part of this right mindset that I was alluding to in my introduction, you have a return on investment driven mindset, meaning the return might indeed be, because this is the primary goal, increased trading on your home market, increased volumes, which will appeal to a broader range of investors. But it also, in terms, and that will lead me to a diversified shareholder base, it's reducing the risks or the volatility of being listed or having a too concentrated shareholder base in one region. Coming back also to what I call the hidden benefits, or how to maximize your ROI with your cross trading on OTC markets. Think about, the invaluable information that you will get from interacting with with US investors when it comes to your own strategy formulation. The investors, institutional or retail, that you're going to be in contact with through OTC markets, or on your own, or via brokers, or via independent research firms, which can also be considered a very valuable investment. These investors have met with your competitors. These investors have a thorough understanding of the US markets, maybe even the niche or the markets that you're operating in. This is so much cheaper than hiring strategy consultants, because the right mindset also implies a dialogue. Investor relations is not a super constant 24/7 Q&A session. If you, the CEO, the CFO, or the IRO, but quite importantly, the C-suite, do not ask questions to investors, which, by the way, investors expect those questions, you're missing out a fantastic opportunity of optimizing your OTC cross-trading investment. So the difference are blurring, coming in a short nutshell, the difference are blurred, but I do encourage you to look at, to benchmark actually your IR practice and typically your earnings announcement or your website, or do you have an OTC ticker, your share price on OTC markets on your website, or do you just have the share price on your home market? The devil is in the detail, and investor relations is certainly a lot about tactical details, but for me, it's all about being organized and proactive.
That's really useful and superb advice. And thank you, Anne, for all of your advice and input today. That does wrap up our webinar, I'm afraid. And there has been a few more questions, which we will endeavour to get to via email.
Sure, absolutely, yeah.
I will make sure any questions directed at Anne, if you send them through to myself, it's jonathan@otcmarkets.com. That's jonathan@otcmarkets.com. And I will make sure those questions get answered. But thanks again. Appreciate your time today, Anne. And
my pleasure. Thank you for having me. A great day to everyone.
Thank you.
Bye.